One of the things that has worried me, and given the kind of indicators that we look at for every economy, has just been how poor the response in terms of economic growth has been to very beneficial external conditions in the sense of exchange rates in both Korea and Japan. Those countries look to me to be in real trouble. Their investment cycles are poor domestically. They've had, as I say, very weak currencies and have been doing very well on the export front, but that just hasn't come through at all. So there is a north-south divide in Asia, but it's a bit different maybe from the one that people have been expecting, which is, of course, that China's the country in trouble. I don't think China's in very much trouble at all. I think it's had a very deliberate set of policy actions to reduce the value of the property sector in the economy. It's achieved those goals. It's now saying job done in that respect, and it can start moving again domestically. I don't think countries like Korea and Japan are able to follow suit. Taiwan is in a different kind of position altogether, purely because it's much more technology export orientated, and I don't think that's going to be affected by any tariff wars that we see. But the good news in the south of Asia is that India is doing well, and the countries around Southeast Asia are pretty well linked into China. And if I'm right, and China's doing better and better as 2025 and 2026 unfold, then Southeast Asia will be riding the coattails rather nicely.
Would that include India's setback too? Because it's a large part of India's rally has been domestic, and India is enough for India's story. But from a foreign investor standpoint, Jim, it's also been about reallocation and relative grading versus China.
Yes, the valuations obviously in India have been high and always are high. And there's actually, I think, very good reason for high valuations in India, because there's good growth and there's good earnings stories. But I think people have been worried, certainly in the last half year or so, that the economy has been slowing down. But it's been slowing down relative to 2 very fast years of economic growth. But when you look at the numbers in terms of return on equity in the stock market, the way that the credit cycle's working, and I expect the RBI will be cutting interest rates later today, the whole kind of backdrop of the currency as well, which is competitive, if not entirely stable. I actually think India looks great, and the sell-off in the Indian market over the last 3 or 4 months is a tremendous buying opportunity.